Hey everybody, all right, we got a great video today. One of the things we're going to talk about today is how to make money off of the upcoming election. And basically, we're sitting here with two options that are very, very different from each other, right? So we have if Trump wins and if Harris wins. But it depends what happens, like where you're going to make money is going to be in two different places. Now, for those who are familiar with the channel, subscribe, watch, and kind of know the deal and where we're going to, how we're going to attack this and what you can expect. But for those that are new to the channel, basically, I will tell you right now offhand, I am not an investor. I have no series licenses. I don't do it. I never have. And on top of that, under normal circumstances, I am probably the worst person to listen to for investment ideas, right? I mean, you might as well just knock on my door. I can hand you my money, and you could probably put it to better use than me losing in the market. That being said, when weird situations come up, really odd situations in the country, I have this penchant for making a ridiculous amount of money. So it's hit and miss, obviously, so I'm not going to it's not under regular circumstances. And it all started, I want to say it was like March of 2009. Correct me or whatever, put something in the comments. It was the BP oil spill, right? And I saw an opportunity. And long and short, I looked at it and it was an absolute riskless opportunity. So I took every penny that I had, wasn't a lot. I threw it at BP stock, and within a matter of, I want to say 7 or 8 months, I made enough money to put a down payment on a beach house here in San Diego, which again, that was a decent amount of money. But anyway, it was an opportunity that I saw that just was not going to strike twice, and it had zero risk to it. So fast forward, another 10 years at least, didn't really do anything. I never invested in the market at all. And then COVID hits, and the market goes down 60%, and certain sectors go down 80, 85, 90%. And I looked, and everybody was saying it's 2 weeks to slow the spread. And I'm like, wait a minute, we're going to get this kind of discount, and it's a temporary thing? Are you kidding me? This isn't because the companies suck or the country's under attack. This is just a blip in the radar that will correct itself. And so I took every penny I had, $5,000, and over the period of about a year, I turned it into $200,000. Now, that being said, and you can go look at the history. I want to say it was early July, maybe July 3rd or 4th or 5th or whatever. I was talking about landing the plane because you have to have a vision for what you want to use the money for. At the time, I said, well, I'm going to use the money to go to law school. And so law school's coming up. I had to write a check for $58,000 or whatever. I was like, all right, let's land the plane, take some of these investments off the table, take the risk or whatever. Well, if you remember, it was the next day, Delta hit, the Delta variant. And normally the market will go up and down. It will go more up than down. So you don't want to take money out after a loss day. Well, it was just water torture. One day after another, just loss. Not a huge amount, but loss every day, consistently. I mean, not consistently, every day until November. And so that $200,000 turned into about $30,000, and I was not feeling it. I thought, man, my timing just sucks in that regard. So I sat on the money. I'm absolutely allergic to taking losses, and made a couple different investment things here and there. For the most part, just sat on it and hope the money would get up. Told you, I'm not the investment guy. And then I started to think about the election, and I'm like, over the last couple months, and I'm like, all right, well, it's going to be one of the two, right? I mean, it was either Biden, Harris, or whatever, or Trump. But if one gets in the office and not the other, it's totally different. Where you put your money, you're not going to put money in fossil fuels if Harris is president. At the same time, you're not going to put money into government subsidized electric charging stations if Trump is president. So I was thinking about it, didn't really know, and then you have to figure out okay, well, you're betting on door number 1 or door number 2. But if it's a 50-50 guess and you don't really know, then it's not really a strategy. So, just generally, unless you're investing somebody else's money, it's really stupid to make any decisions. So as it got closer, um, things started to crystallize, and not because of anything necessarily. I mean, a little bit. My background, for those who don't know, when I in my undergrad, I was worked in advertising, huge firm in the Midwest, and but when you're studying advertising, I mean, basically nobody's going to say this, but it's professional propaganda. You learn how to propagandize people. Your goal is to get people to make a decision to part with their money for something that they would not have ordinarily parted with, right? Give you an example. One of the books we read is this book called Lies, Damn Lies, and Statistics. And so I'll tell you why that's important in a sec, but like the idea is you have a lie, which is bad, and then you have a damn lie, which is like way worse, and then what's even way worse than that is a statistic. And so, for example, one of the methods that we had is a thing called card stacking. And so what card stacking means is it's like the question is how do you get somebody to feel good about a decision and make a decision to do something if they have no experience doing it, right? And so the idea is it's okay to make a mistake if everybody else makes the same mistakes. At least you have plenty of company doing that, right? So you can't feel too bad. And when you do feel bad, you're like, well, everybody else did it, right? But if you make a decision, you're the only one that did it, and everybody else didn't, man, you look bad. People have a lot of shame on it, and so people don't like doing that. So the idea is to try to impose this on other people. So as the election comes along, what most people don't realize is they look at polling and they think, okay, well, that's kind of like the scoreboard in a football game, right? Trump is up, Trump is down, blah, 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 this and that. And now they're even getting to the polymark betting odds and all that bunch of garbage. I mean, the absolute worst thing, the most meaningless thing out there is national polling or popular vote because it just doesn't matter. I mean, it's like, all right, who wins the football game? Well, let's track how many first downs each team had. Well, that doesn't mean anything. It's how many points they get. And so one of the things you have to understand about polling is not meant for you. Polling is meant for two groups of people. Number one, and this is why you got to look at the philosophical bent of who is creating the poll. Number one, it's meant for the parties, like the actual campaigns. And the idea is if you have a polling organization that doesn't want a certain candidate to win, they will try to create a poll that makes the candidate base their decisions on that poll and spend their money elsewhere. So, for example, let's say that Kamala, her campaign thinks that they want Trump to spend more money in Arizona, right? They'll say, okay, well, Trump is down 1 in Arizona. And the idea is, well, let's start to move more money in Arizona and maybe we can win. It's usually meant for that. But even more than that, it's meant for the individual person. So, for example, let's say that you had a situation where they said, okay, they did a poll and they said Trump's up 11. Well, nobody wants that. Neither campaign wants it. Kamala would want it because it's like, oh man, all her people are going to win. Why would I donate when we're going to lose, right? Don't spend money on a losing horse, right? But Trump's campaign doesn't want that either. Because like people are going to say the same thing. Why do I need to donate? The election's already won. So a lot of times you'll see these polls really close because they want to have this. Sometimes it's true, but generally it's a myth that the polls have changed. So like for example, like I remember when Biden left and Kamala, got in the race in Arizona. It was a 10-point swing in like 2 days. And I'm like, there's nobody that's going to like. There is not 5 to 10% of people that said I'm going to vote for Trump. That when Biden left and Kamala was the nominee, now they're going to go, oh, well, I'm going to vote for her. It just doesn't exist. And I saw that, and I'm like, that's patently like a bunch of crap. And so the idea is it's done like the card stacking. It's done to have you change your opinion on it, right? So then it makes people really question who's going to win, who's not. And I will tell you right now, the election is going to be much different than these polls say, for a number of reasons. But we can get into that another time. What we want to do today is talk about what to do if Trump or Harris wins. I'm going to walk you through just a framework of kind of just general things we're going to look at for each one. And then in future videos that are coming out, we're going to talk about where I think it's going, why I think it's going there, and where you want to invest your money and where you want to stay away. Because if you get in early, the idea is you want to get in before other people know that that's really the opportunity. So for example, if you're the first person to stake out a beachfront property, then you don't really pay much for it. But if everybody else moved there, then the property gets a lot more expensive. So let's talk about this. So if Trump wins, what are some things he said and more importantly done and emphasized that give us really good confidence of where we know where his mind is and where you want to invest money. So first of all, he said that he is going to end the war in Ukraine and the war in Israel while he is president-elect. So, like, he's not even just saying, if you make me president, he goes, I'll do it after, like, as soon as the vote's over. And so, with that being said, one of the things you're going to see there is you're going to see a guy take the bull by the horns, right? And I think part of it is you're going to see this budget that went for these foreign wars, and I think they're going to, because they're not going to the Congress is not going to say, oh, well, we gave $200 billion. I don't even know if that's a number. We gave $200 billion to Ukraine, but now that there's no war, we're going to not spend it. Come here. They're totally going to spend it, but they're going to spend it if he's president on his domestic issues, which means there's going to be weight to the areas that we talk about, right? The first area we want to talk about is oil and gas. Trump's already talked about it. He said, when they talked about how are you going to lower inflation, what he said was the main driver, and he's right, by the way, of inflation is energy costs. Now, that is just a nice way of saying liquid natural gas, gasoline, and crude oil. And so if you've watched this before, we did this before for COVID, and there's going to be an opportunity, but different here for that. There's 3 phases of the petroleum market. The first is the drilling. It's the acquisition part. I think that's what they call it. I forget. They're actually like names of these. But I think acquisition's the first one. That's like leasing, drilling, identifying wells, that type of thing. There's processing, and that's the conversion. I used to know these 3. So it's basically taking the crude oil and turning it into gasoline, for example. Like, that's just the easy one, right? And then delivery. So it's actually like shipping, either by pipeline or by truck or by shipping the oil to where it's going to be. But the one thing that people don't talk about is that there's also a huge industry that surrounds this whole oil industry. One of the stocks we're going to talk about is one where they provide, like, they're a huge provider of food service and lodging for the oil workers. So the more the oil is being drilled, the more these people are spending money. So it's very similar to the gold rush, where the people that made the most money weren't the miners. It was the people who made the tools. And obviously, look at Levi Strauss, right? The jeans company. Like, that's where the money was made. And so we're going to see that there as well, and we'll talk about that. All right. So number 2, Trump talked about that he would conduct the largest deportation operation in American history, which is funny because the number 1 prior to that was Eisenhower in the 50s. I didn't know that. I would never have guessed that whatsoever. So with that being said, the reason that's important is it's a driver of inflation, right? So there's generally, I want to say 13 to 15, probably the best estimate in the last few years, of illegal immigrants coming in the country. And the thing is, when they come here, they occupy residences, jobs, and other things. And so what it does is it dilutes the wage scale on the low end. So, I mean, if you're making $300,000 a year, it doesn't dilute you an inch. But if you're making minimum wage or in a job where they could probably pay you less if they could, it's going to dilute that. But it's also affects housing, right? So you say, why is rent up? Well, because you added 15 million people and you didn't build proportional housing. So when you conduct a deportation, you're going to see the housing open up. There's going to be more supply than demand. And for jobs, it's the same thing. Now, some people say, well, really, you're that's true, but it's not true. Okay. So one of the things you're going to find is that the problem, this is, don't think about this. When Biden gave these people like temporary status, what he did is create a file on it. So when Trump comes in, he knows where they're at. Well, they got a debit card. Okay, well, where's the debit card get delivered to? Well, we know where they live. Um, any government benefit, they're going to have addresses, phone numbers, like they're going to have everything. They're going to be able to find these people. But even then, you don't have to deport all 15. What you're going to find is you're going to go after the bad people first, but that's just the threat of them doing this. You're going to see a lot of people not have to wait until it's not ICE now, but wait for ICE to show up at your door and surprise you and deport you. They're going to leave early. And, so what you're going to see is a lot of people self-deport. Now, one of the things Trump did in his first term, and this is when he had to run for re-election. So you can imagine what he's going to do when he doesn't even have to run for re-election anymore. He was talking about these Central American countries that we paid a lot of money to. And he told them, you're not getting another nickel until you take every single person from your country that we want to deport. And they finally capitulated. And so that's going to be the same thing. I mean, there's going to be like some serious weight that he's going to put on these people for them to reabsorb those people back. So I think you're going to see that happen a lot. You're going to see you're going to see a lot of housing stock be vacant. I can tell you after being a landlord before, you're going to see the landlords, you have to have it occupied. You really, as a landlord, especially a commercial landlord, you cannot have these units empty and vacant. So you're going to see specials and rent reductions. You're going to see rent drop in that respect. And then as far as jobs go, I think for the lower end people, you're seeing a big unemployment problem on the lower end of the employment, on the job market. I think you're going to see that correct, and you're going to see the same thing happen in COVID when people didn't want to work. They got paid a lot more, and you're going to see that happen as well. Now, some people out there might go, well, if that does that, then people are going to make more money, it's going to cost more businesses, and it's going to jack up inflation. Well, if it was that simple, maybe, but it's not how that works. Inflation is really simple. Now, we're going to go back to my 4th grade division class. And inflation is basically this. It's the amount of money in the market divided by the gross domestic product. So in other words, how many dollars are out there divided by how much product does America make? Now, you can jack up inflation in easily in one or both 2 ways. One is you print a ridiculous amount of money, which we've done. So people would say, well, we're not going to unprint the money, so there's nothing you can do about it. Okay, fair enough, but that's not the right answer. Secondly, you can actually, the effect on the GDP affects inflation. So if you print money and the GDP goes down, the inflation gets worse than if you just printed the money. But one of the fast ways to really tamp down inflation is to jack up the GDP, do everything possible to get American industry and American products up. So perfect example, let's say that product costs $30 per unit, right? You print a bunch of money, and then next thing you know, it's $50 a unit, just based on money printing alone. And you're like, well, how can we get it back down to 30? You're not going to unprint 20, $20 worth of whatever the currency is. But if you double the GDP, I'm not saying we're going to double it, but if you take that GDP from 1 to 2, you'll drop it down to 25, from 50 to 25. And so the fastest way to reduce inflation, even when you're doing all this, is to do everything possible to increase the gross domestic product. And Trump has talked about it. He's talked about rebuilding mills. And one of the things he talked about specifically in the last probably few days, he said, tariffs are his favorite word in the English language. And so I was heading to work this morning, and I heard him talking about it. And one of the things he said was, and it's an interesting point because I never thought of it that way. I used to think okay, there's a tariff, we're going to charge a certain tariff, the other country pays it, but they're going to keep their manufacturing base abroad. But he said one of the things you have to do is you have to be so aggressive with the tariff that it makes them shut down their manufacturing base. And so what he was saying was, basically you have a company, and they have a factory abroad, and it costs X amount of dollars per product to sell that product, to manufacture it and sell it in the United States, right? If you add a tariff, they might just absorb the tariff and keep the manufacturing base. Why? Well, there's no like the employment laws and safety laws and all the everything else is a lot more amenable abroad than it is in the United States. But if you make the tariff high enough, then that country will move their factory to the United States. And you'd say, well, would we ever do that? Well, we have done. Like in Europe, the auto industry and the Japanese auto industry, you'll see all these Honda plants and BMW. They make certain things here as well. And one of the things Trump said is he goes, I'm going to put a tariff so high on them that they're going to shut down their factory. And he said the largest factory in the world is China was building it in Mexico. And he said they just once they realized they thought I was going to be president, they already shut it down. Like they're not doing it. He goes, I'm going to put a tariff, so I'm going to put 200 to 300% tariff on anything. You're never going to be able to sell anything in this country. And they've already shut down that factory, and the election isn't even happened. So you have to understand that the effect that the deportation and the tariffs are going to have on it, I think, are going to be really important. But the other thing you got to realize about inflation is people, are like, well, it's still going to cost more, and so it'll jack up inflation. And I'm like, okay, but you got to look at real life. Let's say you're right. I don't think you're right. But let's say you are right. If you have a job, if you don't have a job, whatever car you buy, used, old, new, whatever, is generally going to be kind of unaffordable, right? But if all of a sudden you work at a job and you make a lot more money, well, then you can get a Honda or you can get an Audi or a BMW. And you're like, well, the Audi or BMW is more expensive. But yeah, but you're making more money, so the people are going to spend money on that. And the same thing is true. If you're basically doing everything possible to increase the gross domestic product and trying to revive industries and rebuild infrastructure so that you can get people to get those factories out of the United States into the United States, it might raise the cost. Maybe. Yeah, I don't think it will. But even if it did, you're going to have people that actually have more money in their pocket right now, and relatively, it's not going to impact them more. In fact, it's going to be a lot cheaper because they have money in their pocket. So, with that being said, let's talk about corporate tax cuts. He talked about the fact that, and he did this the first time, he dropped the corporate tax rate from 28% to 21%. And he's already talked about the fact that he wants to take it down to 15%. And you'll see all this stuff, and this is just where it's a shell game, and the government will come up and say, well, the Congressional Budget Office will say, well, it's going to add X amount to the deficit. The problem is they said that before. All it did was increase the tax receipts. Now, when the deficit went up, it's just because Congress is crooked and they actually spent more money. But when you look at the amount of money came in, it was dramatically higher. And you got to look at it from a corporate, and the reason you can know this is you got to look at it from the corporation standpoint. So you have X amount of revenues, you have to spend X amount on wages, insurance, real estate, all these different things. And then obviously then you get the taxes. And then they price their products accordingly. But when you pay less taxes, one of two things, if not both, will happen. Number one is they'll have more money from operating, basically an operating margin, basically early profits. But they're not gonna sit on that money. Investors hate that. They don't want to invest in a company that just sticks their profit in a checking account. They want to have that money reinvested. And so the corporations typically will either hire more people. I mean, they're generally not going to try to pay people more. That's stupid. But they're going to hire more people or grow or enhance their operation so that they can actually make more money and make it a bigger operation. And so, that's one that's actually going to help people build the market and reduce inflation for sure. But then at the same time, it could lower costs as well, right? So you can have a corporation be more aggressive in pricing, competitively pricing the product, because they don't have to price it as high anymore. And if the other corporations are having the same thing, it will have a depression or a deflationary effect on the Trump also talked about lowering tax interest rates. Now, that's a big thing with the housing market and the auto market and even the banking sector right now. Trump during COVID, he always talked about how he loved that it was 0% interest rates, and we should borrow more money and refinance them. Like, I agree with the refinance. I don't know about the borrow more money part, but the idea is when you lower the interest rates, you're doing a couple things. One, you're taking the stress off the banks because there's less of a risk of default on people that are borrowing money. Secondly, people borrow more money, which banks like, so it'll help make more money and it'll help stimulate the economy. But number two, it's gonna put a correction in the housing and the auto market. The housing market, people aren't selling their houses because they have a 3% loan. They don't want to flip it to a 7% loan, and so people are holding on. And like I say, that they can do that as long as they don't lose their job. But when layoffs happen, it's going to be a problem. But if Trump were to win, I don't think layoffs are going to be as big of an issue. And all of a sudden, you're going to see that interest rate, and you're going to see people with the appreciation they've seen in their house. They'll trade the 3% loan for a 4.5% loan. If they get that appreciation, they can flip it into something else. So the same reason that the housing stock was frozen and there wasn't a lot of houses, I think the opposite can easily happen, where you're going to see it open up a lot. Again, supply and demand, the more supply, with demand being the same, you can always adjust it, but it means the price is going to go down because people don't have to buy that house. There's lots of competition for that. And the same thing for the auto industry. I mean, that one's been hammered by interest rates because you buy a car and you're paying 8 to 9%, and they're always going to pay more than a mortgage, 8 to 9% on a car loan. And it makes it really difficult. I heard this thing, we're doing 84-month car loans. That's 7 years. I mean, the car generally is not expected to last 7 years. If it does, then good luck with the repair costs. But when you have the interest rates lower, people aren't going to necessarily do that. They'll do shorter loans, or they'll spend more money on cars. Either way, it's really going to boost that. And generally, the car industry in the United States is manufactured domestically, and that's something where you're going to see more jobs coming into play. One of the things we saw during COVID, and I think will come back, is if Trump wins, the small cap stocks are going to be important. When we say small cap, it means small capitalization. It means smaller companies, not like the big behemoth corporations. And generally, those are the companies that take advantage of increases in discretionary income. So, the Football Hall of Fame, the Grand Ole Opry, the things that happen in Branson. I mean, not Disneyland, because that's like a bigger thing, but amusement parks to that degree. Concerts, football games, things like that. You're going to see people, when they have more money in their pocket, they're going to generally spend more. Small cap stocks we're going to be looking at. Conversely, no big tech. Like, big tech is taking advantage of the fact that they use their size as a leverage against competition. But I can tell you the way that they've treated Trump, big tech companies, except X, that I think they're going to have a lot of trouble. And I think you're going to see some congressional investigations, especially when it came to the censorship that went on the social media platforms. So whether it's YouTube, Facebook, any of those, I think you're going to see a big problem if he gets in them. All right, so let's see. All right, so let's talk about Harris for a minute. All right, if Harris gets elected, everything I just told you is not going to happen. Number one, her big thing there is renewable energy. The problem is that industry is too early. It cannot survive on its own independently, and it relies a lot on government subsidies. So, for example, they had a thing where I think they spent $8 billion to build I can't even make this up, 9 electric car chargers, and then like 3 of them don't even work. Or no, 8 of them. 3 of the 8 don't even work. But if you look at the history of that industry, it's heavily reliant on government subsidies, and a lot of those companies go under. And unfortunately, the government doesn't take the hint very well, and they just keep throwing money at it. So if she gets in there, we're definitely going to look at that industry. We're also going to look at government contractors. Like, well, why is that? And I'm like, well, Harris gets elected, you're going to see the U.S. one be involved in more conflicts abroad, which is going to be a lot more government contractors. But also at the same point, they've projected weakness, especially starting with that Afghanistan withdrawal, and that really incentivizes countries to be a little bit more bolder about being aggressive. And so I think the government contractors are definitely going to be something to look at there. Talked about renewable energy. I think we're going to look at EVs. I think the amount of pressure they're going to put on the auto industry to focus on EVs is going to be big. But we're going to look at chargers, charging networks, and the infrastructure that goes along with that. When we talked about interest rates, I think they don't know what, just to be fair, it's not even a political thing. They don't know what they're doing with the economy. I've heard the guy that is the White House economic advisor, and he literally doesn't know how this works. They had an outtake that came out on one of his interviews, and he admitted to the interviewer that he didn't understand what Keynesian or modern monetary theory was, which blows my mind. And so with that being said, the interest rate rise, I think will continue to go up, and that's a big problem for banks because the long and short of it, I'm not going to get into the huge thing, but banks basically, they have to invest their money. And so they'll take money and they'll invest it over the period of a year, bonds, treasury bonds, this and that, over the course of a year. The reason that the banks failed in the past year is because they invested in really long bonds, and then the interest rates went up and they were under market. And the long and short of it is the investors priced those bonds, and so the value of those bonds dropped dramatically, and they had to show that on their balance sheet, and they went under. So I think that's going to be a continued problem. We had a bank fail this past week, and I think that's going to be a big problem. So I would definitely stay away from banks, especially considering that the mortgages and auto loans are going to be a big problem for them. And so if that's the case, we're going to stay only with large cap stocks, particularly in the high tech sector and social media. But we're also going to look at China too. Kamala has a very, very soft touch on China, and her vice president pretty much is Chinese. So if that's the case, you're going to see a lot of Chinese stocks have an opportunity to really take hold. So we would look at that. And we can't do that. We can't talk about Harris without talking about cannabis. When she ran for office 4 years ago, I think it was, 4 or 5 years ago, she was on Charlemagne the God's podcast talking about how she used to smoke pot in college. But the problem is she lied. She said she was listening to, Snoop Dogg, but it was like 84, so or something like that. And Snoop Dogg was like 5 years old. Like he wasn't doing anything back then. So she lied about that. But she's the same person out here in California that jailed any and everybody she could for smoking weed when she smoked it herself. So I have a feeling that's going to be part of it as well, but we'll touch base on that a little bit. I have to say, though, that I always said that the first person that said they were going to legalize marijuana and take it off the Schedule I drug was probably going to elected president, and I just am blown away that nobody has done that yet. So she may not have promised it, but I think it's something that might happen on there. So with that being said, stay tuned. We've got some more videos coming up. I'm going to actually screen grab my investment screen, so I'm going to walk you through where I have money, where things are at, and I also will, because I usually keep an Excel chart, so I'll track returns. You can see where things are going. But in the next video, I think what we're going to do is we're going to talk about, the question is Harris or Trump going to win? And if you listen to the media, I'm telling you, I used to work there. They're not there to inform you. It's a game, and they have certain things that they're trying to do, and they're going to make it seem like it's very, very close, but it's not. And I'm going to walk you through exactly why I think that. Really, I'm not saying I know it, but why I'm unbelievably highly confident that it's very different what they're saying. So we'll cover that next. Talk about why, where I think it really is right now, and then we can start to really talk about, kind of where we want to go with that. So if you have any questions, anything you liked, hated, anything, whatever you want to do, put a comment in there, like the channel, like the video. If If you have things that you want me to talk about, let me know, and I'll be more than happy to do that. But this is going to be an opportunity for you to really take advantage of this and make money. I will tell you right now, the people that I respect are starting. They're not like full on talking about this yet, but they're starting. There's rumbles where they're starting to bring it up. Uh, but I would say this under normal circumstances, it's not something that I'm ever very good at. But in a situation like this, where you have a very weird situation and people don't know what to do, this is kind of right up my alley. And so I will tell you right now, I have 65 grand, and I want to. Again, I still think we can get up to 200 grand. So we're going to do that. And I want to pay off my law school loans, and I don't know, we'll do some fun with it. If you have anything that you want to do with money that you make, put it in the chat, let me know, and we'll go from there. With that being said,